Let's drill down now on the August jobs report, which was weaker than expected. Payrolls at 142, below the 161,000 estimate. The unemployment rate, though, ticked down to 4.2%. And according to data from online employment marketplace ZipRecruiter, online job postings are down more than 7% over the past year, but also up slightly in the past month. Julia Pollak is the chief economist there. Julia, it's good to have you. So do you think a slightly better tone in the past month to the labor market is for real?
I don't. I think the broad trend is that the labor market is slowing and slackening, and I think this report was not reassuring. It was not very strong. We had these large revisions to the prior 2 months, and job growth is very, very narrowly concentrated. The number of jobs added in the private sector outside of healthcare was just 74,000 in the last 3 months. That's been around 30,000, well below the pre-pandemic average of 137,000 a month.
Even though you saw a ever so slight increase or uptick in job openings. So it sounds to me like you guys would more confirm the overall kind of downbeat signals we're getting from the official JOLTS measure and so forth.
Yes, and we just computed our job seeker confidence index today. Job seekers registered the lowest levels of job seeker sentiment that we've seen in the history of our survey. They're finding it harder to get a job. They are becoming less likely to negotiate their offers, more desperate to accept the first offer. So we're seeing clearly among job seekers that they're having a much harder time. Also, about that unemployment rate, it really didn't budge at all. If you look at the unrounded figures, it went from 4.25% to 4.22%. That's basically an imperceptible change. It was all rounding that made it look like a rosy decline.
I think it's interesting because we talk about some of the inline rounding type errors. But one thing that we didn't see was a less significant move in terms of wages. It was actually decently significant. It was 3.8% year over year. That for right now puts it above inflation. Where are we seeing in the job market right now the gains being driven by? What sectors, what industries, what types of job seekers are actually getting paid more in this kind of environment as opposed to maybe nothing or less?
So we're still seeing about 5.5 million people being hired every month, right? This is a huge economy. It's very dynamic, and there are jobs to be had. But the demand for workers is quite narrowly concentrated in a few places. In healthcare, demand is strong for everything from physicians to physician's assistants to nurses to nursing assistants. We see huge demand in the skilled trades and for engineers, physical engineers, electrical engineers, industrial engineers. There's also tremendous demand in the government right now for police officers, for teachers, for people in law enforcement. So there are definitely pockets of strength, and wage growth is still sort of normalizing, equalizing between unionized fields and public sector occupations and the private sector, where wage growth is continuing to slow.
Yeah, although, again, last month, at least in the BLS numbers, there was a slight improvement in wage growth. But to me, the more important thing, Julie, and the reason why we bring up the unemployment rate, flat as it may be, is this concern kind of going to the beverage curve analogy that when the unemployment rate starts to increase, all of a sudden it's going to start to increase quite quickly. And we know when payrolls go negative, that's usually when the recession begins. And so all I'm trying to do is hold on to hope that we're not headed down that path. And so when I get a jobs report like this, I go, okay, it wasn't great, but we're not at that moment of accelerating weakness yet. And maybe there's hope that that moment may not come.
Well, there's a lot of reason for hope. Right? Real wage growth has been positive for over a year now. That is propping up consumer spending. Earnings season has been pretty good. Companies are doing well by and large. The issue is that, if you look at the Fed's beige book, if you look at a lot of the softer measures, they're great overall in the economy, but they're not very good when it comes to hiring. Consumer confidence rose, but the employment differential actually fell. In the ISM services number, we saw fairly weak, but still expansionary figures for services overall, but not on the employment side. On the employment side, we're basically at stagnation. And so the issue is that the labor market is cooling. The beige book was just full of anecdotes this week about companies delaying hiring, pausing hiring, slowing hiring because of uncertainty about the future path of rates, basically, of interest rates.
Oh, it's interesting because the path for interest rates seems a little bit more certain these days right now. Julia Pollak, thank you very much. Always great to see you. We'll see you soon.